what is going on, everybody? To another episode of the Rapid Review. Appreciate everybody joining live, both on YouTube and on X. As always, comments are open. Questions, comments, agree, disagree, stocks you want to look at, throw it all in the chat. Appreciate everybody all of last year. All the support that you guys gave me, all the comments, all the questions, likes, everything. Really keeps me motivated to keep these up and going. So really appreciate that. And looking forward to another year, 2026, doing this all again with you guys, and hopefully you can grow a little bit more. If you have been watching, subscribe, like, comment. You guys know all the stuff that'll just give the algorithm what it needs to give us a little bit more attention here, make this group a little bit bigger. So but again, huge shout out to you guys. So without further ado, it's time for the rapid review. All right, so a little weird, right? Because we're kind of in like this week was an in-between of the end of last year and the beginning of this year. So we're going to look at things from kind of both perspectives. First off, as you guys know, disclaimer, educational informational purposes only. This is not financial investment or trading advice. Distribution days. All right. So right now I'm going to change the market direction a little bit. And I'm going to try to add a little bit more detail this year, not just a macro uptrend. I think those micro trends inside of that macro trend, are very important. So I want to make sure that I list that out there. And for that, we have a choppy trend. And we've been in this choppy environment arguably since beginning of October, I would say. And it's something we've kind of talked about. There's been these rallies, tradable rallies for sure, that could produce some profits. But especially for the position trader, it's definitely been a very, very choppy environment. And if you aren't taking profits very quickly, good chance you're getting chopped up, as the market direction suggests. In terms of distribution days, 7 and 7, both distribution days, both indexes had 5 and 5 last week. And you can see that we did add some distribution. So again, I always add this disclaimer out there because I know there's a lot of IBD followers out there. My rules will apply to the same rules that IBD is using, same rules that CANSLIM, Market School, those things are using. The difference comes from the volume source. Give or take, sometimes I have a distribution day that they don't have, or vice versa. Looking at, though, how my week shaked out. We gained a distribution day on Monday and Wednesday on the S&P. That was 1229 and 1231. And then we gained a distribution day on Monday and Tuesday. The NASDAQ was 1229, 1230. That's what brought us from 5 on each to 7 on each. Looking into next week, the 12-1 distribution day is going to drop off due to time. We'll have 25 trading days since that distribution day, so we'll see that drop off. And other than that, not very likely to see anything else drop off. So if we don't gain any next week, we'll be looking at 6 and 6 at the end of the week, most likely. If we do gain, then obviously we're gonna be higher than that. But definitely some distribution that has been gained since the beginning of really December. And that's one of those things I always kind of look at too, is just seeing the negatives on these, negative. There's some positives in there too, but that just tells me that wherever we were at that close of that distribution day, we're below that as of right now, which is not good. Definitely showing a little more validity to maybe that selling that was showing up on that day. All right, current state of the market. So first we'll go for the week, which would be this week compared to last week, and then we'll see how we ended for 2025. Not necessarily including the end of this week. All right, so for the week, we're down 1.03%. For the S&P. For the NASDAQ, we're down 1.52%. And for the Dow let out the week, down 0.67%. For 2025, now, if you beat all three of these indexes, that is awesome. That is basically my bare minimum goal is to at least beat the indexes. So if you did that, that's awesome. That proves that your trading is worth your time. And here's what you're comparing yourself to, right? 16.39% on the S&P. If you beat the NASDAQ, all you had to do is be up 20.36% or more for the year. And the Dow 12.97%. So there you have it, how we finished off 2025. And hope you guys were able to beat out the indexes. All right. Moving averages. We saw some changes on the moving averages. We are green on all moving averages going into the beginning of this week. The S&P did break the 10-day simple moving average. Not too alarming. But the NASDAQ was the big break on Friday. We had the break of the 10, the break of the 21, and the break of the 50. Going back a little bit, Osprey said, is beating the NASDAQ more important if we are trading CANSLIM? I personally would argue beating the NASDAQ, beating the indexes in general, is important no matter what you're doing. Whether you tell me you're a swing trader, a position trader, a day trader, it really doesn't matter to me, because if you're not beating the indexes, then why are you not just putting your money into an ETF index fund? You throw it in the QQQs, throw it in the SPY, and then forget about it, and then watch it perform like 20% for the year. If you're underperforming that, then why are you trading, kind of thing. Now, with that caveat, if you are earlier and you're learning to trade, you can't expect that you're going to do that consistently your first couple years. There's going to be years where you underperform. There's going to be years where you overperform. But on average, I want to be beating those indexes to prove that my work is worth my time. So, but I don't think it matters at all what style you're trading. It's just a benchmark to say, the overall market's outperforming you as a trader. Why are you not just putting your money in the overall market type of thing? All right. But great question, Osprey. Dow stayed up. Like we said, the Dow led out the week, so we're green on all. And then the Russell broke below the 10 and the 21 right there. You can see that. All right, so let's jump over and take a look, as we always do, at the indexes, and we'll start off on the NASDAQ. So one of the things that I've consistently talked about is we had this holiday week, right? Last week was Christmas. Then we tied that into New Year's Eve this week. And when you have this time of year, especially the time between Christmas, New Year's, that whole kind of time frame, I always kind of put an asterisk in my mind, because I understand that there's a lot less big institutional investing and trading going on during these time frames. I understand that people, just like any other job, are out of the office and there's less activity going on. So with that being said, especially with the lighter volume things, I just add a little asterisk in my mind and saying, like, all right, this is happening all on low volume, all during a holiday week. Let's see what happens as we start to start up in the new year. The big thing, well, let's first go through what went on this week. So we had a short week, again, 4 trading days. We finished off last week where I had actually said I would not be surprised to see the market pull back, possibly even to the moving averages, creating what would be a perfect kind of VCP type pattern, right? So you had this big pullback here, or big drop, pullback, but a higher high, and then another pullback right off of this high right here. So if we can hold this higher low, and this volatility I don't like, but if we could just hold this higher low and then break out from here, I mean, that's like a perfect VCP breakout on the NASDAQ. So really kind of somewhat what I expected did happen. We kind of just moseyed on down to the 50. I think what was just a little unexpected was just the volatility on Friday. We had the big gap up. We had a little bit of a rally, and then we kind of reversed. We tested again this is that 10 level, if I remember correctly. Yeah, those 10-10 levels again playing. You can just see how many times we're closing around that area. And then we kind of bounced off of it, but still closed below the 50. So not great, not positive to see, seeing that kind of almost range move over on Friday. But this, as long as we can kind of create a new low, a higher low, that would be something that would be positive for me. Now, I don't like that we're below the 50-day. That's never a good thing. I don't like being below the 21, and I don't like being below the 10. That's all bad. But I also realize that we're kind of fighting right around that level. So hopefully, if we're going to go higher, we're just kind of shaking out below those levels and then going to rally. But I do like that we're staying above that 10-10 level, which has just happened to play This line has happened to come into play many, many times. And then obviously we're still holding above that higher low. So as we start to see volume pick up, we'll see what happens. One of the things that I have noticed over the years is January tends to be, as we start to see just trading volume pick up again, because people are now off vacation, it does get a little more volatile, especially when compared to when there was a lot of people out of the office. It's just something that I've noticed. It doesn't really necessarily change my trading style. It's just something that I've noticed. So it's kind of something that I kind of expect just to happen. Just for the holidays. It's just how it is. Brian, what's going on? Good morning. All right. Looking at the weekly, let's just take a quick snapshot there. You can see, we're still in that macro uptrend. We're still holding them, really holding above that 10-week moving average there. Nothing really to write home about. Looking at key levels, though, I kind of set it to the downside, right? Hold above the 1010, hold above the 1217 low, and then ultimately the 1121 low, which at that point, I think most of us would be well out of the market by then. To the upside, obviously it's a moving averages, right? The 10, the 21, the 50, but really, really, this day right here, the 1210 high, if we can get a breakout through there, I'm not even too ultimately concerned about over on the 1029 area. Like it could come into play eventually, but taking out this would be ultimately what I'm looking for. So kind of a wait and see moment. Things are starting to perk up, but still something to really, really watch and really, really look at, I think, is that 1210 high. All right, let's actually look at the NASDAQ. At the S&P, just because this was performing much, much better and still is performing much, much better. Didn't really have that VCP type of pattern. We did kind of have similar action. It broke to all-time highs right around the holidays. Christmas Eve was actually an all-time high breakout, and then we kind of have rolled over. But finding support at that 21 over here. So this is positive to see that. Very similar, just overall stronger. And right, we made it from the all-time highs and then kind of pulled back and squatted. I don't like the selling coming in, but at the same time, I'm realizing that the volume's a little funky, right? When you're comparing some of these volume days, this Monday, we're comparing to the day after Christmas. And then this being the last day of the year too, so just little caveats to the slightly increase in volume resulting in distribution days. And I think as much as it triggers the rule, you need to understand the context of what's going on. That could also alter the data slightly. All right. Nobody seems to have questions or anything to talk about on the indexes, so let's jump over to Deepvue. Excuse me, working off a little bit of a cold. All right, so as we always do, we're going to look at the theme tracker. If you guys don't know, I'm a Deepvue partner. This is the tool that I use for all my stock screening, chart analysis, fundamental analysis, looking at industry groups, looking at themes. And this is one of my favorite things is this theme tracker, getting a chance to kind of look at things on different time frames. So we have 1 week, 1 month, 3 month, and year to date. And just kind of looking at things as of right now. So let's see something. All right. So on the 1 week time frame, we saw oil and gas. Semiconductors was the big talk of the week. Really, really seeing semiconductors, storage, showing a ton of strength on Friday. There's a lot of news and stuff tied to that too, but I don't really care. All I care about is just seeing that buying power come into there. Social media, China internet, steel, Bitcoin. Bitcoin started to pop up a little bit too. And then we got some defensive stuff in utilities. Aerospace has been talked about a lot. Space exploration talked about a lot. AI. Solar also kind of starting to show up a little bit more on a lot of my screeners as well. The 1 month time frame. So this is expanding out a little bit more. Like we had just said, aerospace and solar, two big there. Two big names that I've been constantly seeing. The silver miners still continuing to show strength, though we did see a lot of the rare earth metals get hit pretty bad this week. Other than that, I think semiconductors, like I said, a lot of strength there. and the 3-month time frame. Now, here's one of the things I'm going to say. If we are starting to see some rotation, right? And I know people have talked about we're having rotation. Might not be just yet. It might just be 1 week, 1 week of a well performing group getting crushed does not necessarily mean that that is rotation in in the sense that like now they're out of the lead and now somebody else is stepping in. It could just be one bad week, it pulls back and then it rebounds right away. It could be the start of basing patterns or other things taking the lead. So it's still too early to say, in my opinion, whether this is a actual true rotation or just a bad week for a group that's been performing well. You need to see trends, not just these blips on the radar. So a couple things that I'm watching. I'm watching those rare earth minerals. I'm watching the gold, the silver, the miners, all those that have led really 2025 from start to finish almost, and seeing if that continues or if they're going to get hit and other things are going to start to take up. The semiconductors were super, super strong. We want to see if that can follow through and continue. A lot of those names, I think, are starting to get a little extended. So if you're not in them now, and it might be a little too late on some of those names, but there's that group like that. There's a lot of names that could always pop up because it's just such a wide, vast group. Brian, do you anticipate next week being volatile with the news about Venezuela? I don't really care, to be honest, about the news. To me, it's just a non-factor. It really is. It could, like, we could see a volatile reaction, and we could not. I've seen many times in my trading over the last over 8 years where something like this happens and people expect a reaction by the market, and either A, they don't get a reaction, or B, they get a reaction the opposite of what they thought. It's just a no factor. I think if you are a trader, the greatest thing you could do is just completely disregard the news and forget about it, because it's completely, utterly a waste of time, in my opinion. And I think it clouds people's judgment, and it's just useless. I'm going to be honest. I'm completely useless. It's good to know when earnings are coming out, because that's going to be a volatile period. But for me to sit here and say, is it going to be more volatile because of the news? 100%, I could see that happening, but it doesn't necessarily mean that that's going to be the case. And it doesn't really make a difference to me of how I'm going into next week. Lately, on Mondays in general, I'm a little more conservative at the open, because last year we were seeing a lot of big gap ups and then reversals to the downside. So I've been kind of trading that way since, because it just seems to be benefiting me not getting stopped out that day. But yeah, personally, look, it could make some big reaction. It could not make reaction. Could be positive, could be negative, could be a nothing. Doesn't really matter to me, and I don't think it should matter to really other people out there. All right. Look, finishing up really where we're at in terms of theme tracker, though. I definitely think that space exploration, I said this last week, is something just to keep an eye on and see if that continues to show strength. I think solar is starting to perk up again. Semiconductors is starting to perk up again. And I don't think you need to completely forget about your silver, your gold, your rare earth minerals. Do not forget about those. Just because they had a bad week or two does not mean that it's completely out of favor. It could just be a pullback, and there could be even some opportunities popping up in those areas, and you don't want to forget about them. So, one bad day, one bad week doesn't necessarily ruin an entire trend. So keep an eye on that. Let's go to the ETF theme tracker, and that's 1 month. Go daily on the left, weekly on the right. This is something we've been talking about. Again, the marijuana stocks. They were showing a lot of relative strength on the 1 month time frame. As of late, towards the end of the year, kind of rolled over. Just something I'm keeping an eye on. Not that it's fully in favor. Here we go. This is right. We're talking about that silver. People saying like, oh, it's getting crushed. It's like, it's still trending fine. Still trending fine. This space ETF, right? Look at that. That looks perfect. Really nice cup, really nice handle, really nice pop right off that moving average towards possibly that handle breakout. So really paying attention to that. There you have your what do you call it? Warrior Cannabis. Again, minerals, rare earth, metals, stuff like that. Copper miners, like that. Oh, they got crushed. Like they had a horrible week. It's like, okay, yeah, it's still above the 10-day. Not really concerning there. Metals and mining still above the 5-day. Metals and mining, right? Perfect pullback right here. Breakout. Like this is where again, the noise sometimes. Yes. Do they have a bad day or two? Yeah. But is the trend completely over with a lot of these? I wouldn't say so. Space and defense ETF. We talked about that already. Aerospace and defense. Aerospace and defense. Solar. This is another one that we were just talking about. Look at that. Solar. Big pop on Friday on volume with that cup with handle type of breakout. Seeing a lot of these patterns. Cup, handle, pop. Not as much on the weekly. Uranium. Big pop there. Like it just... We definitely saw a really strong move on Friday with a lot of names. The question is this going to follow through? And a lot of those did pop, but not actually break through those handles too. So silver miners, Africa, global jets, steel right off those all-time highs. It's kind of extended, gone on a run, didn't really have a true basing pattern, but steel still trending higher. European financials, lithium battery still trending higher. Telecommunications, restaurants, gold. Look, gold did get hit a little worse, but this is something, again, it closed like the ETF, at least GDX. It's gone on a nice run and it's closed above, it shook out and closed above that 21-day. Now, this could just be a blip and then it rolls back over, but this could just be a shakeout and it continues higher. I think it's very important to take things into context sometimes and not just sit there and be like, gold got crushed, it's over. Everybody wants to be the doomsday of, I told you this was going to crash. Transportation. All right, now we're in the 80s. So, look, I just like doing that. It gives me a good context of really what's going on. Now, if to those people saying, well, maybe we're getting rotation. So we're looking at this 1 month time frame. And I think maybe that's not the move. Maybe you want to look at the 1 week time frame, just see what's going on the week. Let's reset these. And this is why I like doing this way. So now I'm sorting by that 1 week relative strength. This is comparing to the S&P. Uranium miners, oil, China, uranium and nuclear, emerging markets. What is this one? Oh, EEM, social media, clean energy, Bitcoin. Look, this Bitcoin ETF looks rough. So again, 1 week. This is still in stage 4. Bitcoin, semiconductors. This looks great. This semiconductor stuff looks great. Oil. Emerging markets, semis, clean tech, ETF, future technology, vehicles technology, timber. All right, we're in the 80s. So between the theme tracker, between my ETF theme tracker, between it on a 1 month time frame, on a 1 week time frame, everybody talking about rotation, I think we're still too early to tell. It was a volatile, rough week for those metal miners, but I think it's more of a time right now to let things prove itself. I do think the semiconductors are very, very important to pay attention to because of how it is performing and because I think a lot of growth stocks tend to come from that, and they do seem to be perking up. Now, with the question being, for semis, do you see a VCP pattern? So let's go to semis real quick. I have a couple of semi. There we go. All right, this is just the Vantech one. Yeah, I would say this is overall something like a VCP pattern, right? We had this big dip, smaller dip, pullback, pop. So I would definitely say this is a VCP pattern. I don't even want to say it's building. I think it is a VCP pattern. If anything, I could see people wanting to buy right off of this kind of pullback right here. And when we talk about stocks, we can bring up a couple names and we'll talk about those because I think there's a lot of people who had bought some of these names this week. But if you click over here, and this is why I love doing it this way, I now have a list of 25 names that are in here, and like here's a perfect example. MU, I know some people trading that. Taiwan Semiconductors, I know some people that traded that. There's a lot of, you can kind of, good old NVIDIA. There's a lot of names you can just go through just by doing that and seeing that there's strength in any group, and that works for a lot of these. So still learning to recognize patterns. The biggest thing I would say if you're recognizing patterns is write out the characteristics of those patterns, write out the time frame, just write out how the pattern works. It needs to see an uptrend of X%. It needs to then have a sideways or pullback action no deeper than this, at least this far in terms of time frame. Look for this shape, look for this tightness, like study those patterns. There's a lot of resources out there. Write those rules down and then use those rules and have them as a quick access guide so you can kind of just keep track of everything. All right. Let's talk exposure levels. My exposure levels, I think right now we're still floating around that 40 to 60. Excuse me. Still floating on that 40 to 60% range for sure. If you possibly bought, especially some of the smaller caps and some of these leading names, I think you could be starting to move towards that closer to 80% invested. But it was very selective in the names that you had to be in to feel that way. So I think most people are probably going to err to the 40 to 60% side. A few people, if you happen to fall and pick into those right names, could be breaking above that 60%. But I wouldn't be too quick to be like 100% invested in a market like this just yet. We've actually only had one trading day this year, so it's pretty interesting too. So just be patient. Understand that just around these holidays, around the start of a new year, there's always a little bit of volatility, whether, it could be because of, Venezuela stuff. It could be because of the end of the year in January. Like we just see that volume picks up and things get a little choppier. So it could be for a number of reasons. I don't really care what the reason is. I just want to trade what the market's telling me. So, yeah, that's kind of where my exposure level is. Not too much different from the last couple of weeks. A little bit more wait and see, but just also understanding with some of these names that are breaking out and showing some strength. I think the market's starting to pull some of us in, as it has myself. All right. So let's go back over to Deepvue. We'll talk stocks. Well, here you go. You guys can see what I own. And you'll understand now that you see, because I opened up to what I own. You guys will understand as to why I'm probably saying what I'm saying, right? Where certain names, if you had bought certain names, kind of are dragging you in. 5 was something that I'm basically getting to about a 15% move on. This has just shown a lot of strength and has kept me in, has not washed me out. This I had bought kind of earlier in the day on. This is a stock I've been watching for a very, very long time. As you can see, I blew this freaking breakout over here. So I had bought kind of off of this pullback and kind of bounce here with seeing a lot of strength in this name earlier in the day, and then was able to gain a couple percent before getting to the close. But this is a high volatility, high ATR name. This is one of those Bitcoin miners. This was one of the top stocks last year in the Bitcoin mining space. Reddit, one of those names that I had bought a little bit back a couple weeks ago. Was it a couple weeks ago? I think it was a couple weeks ago. And it just hasn't given me a reason to sell. It's been just kind of moseying its way up, hoping to see a little more of a powerful move in this. And then this was the big one I think a lot of us talked about right here. This kind of, I don't know if I want to call it technically. Yeah, I guess this would be a cup because we're like from here to here. Yeah, it's definitely a cup. So you have like this kind of nice long cup with handle. Pull back on lighter volume. Big volume move breaking out to the top of that handle. Triggered me in here on this one. And this more traditional CANSLIM type breakout. And this continued throughout the day. You can see closing kind of near those highs. So this also gave me a couple of percent. So this is where I got dragged into the market, so you guys can see. All right, let's talk. What else? App crushed. And this is why you have to have sell rules, right? Would you say Reddit is still in a buy range? All right, let's go back to that. I would say, yeah, I would say, I mean, not necessarily in a buy range. Kind of depends on how you like to enter stocks, right? If you're somebody on a more traditional CANSLIM breakout type of trader, since I would say that breakout started Friday. Yeah, I would say, like, if I'm looking at the bulk of those names, that close of Friday was kind of the breakout right there. It depends. Like, from, let's say, if you want to put your technical stop to the 21 day, that's fair. I think that's all within range, you know, especially if you're somebody who goes and puts 7% stops. If you want to go down to here, you're at 8.5. So I would still say this is in a buy range in the sense of we just broke out. We're not too far extended off those all-time highs from a percent from pivot, and also in a likely area to put a logical stop. Like the 21 is a very logical stop area, I think, for this, even this prior low. So if you were to kind of half here, half there type of thing, you can manage your risk pretty well here. You almost got like a small VCP pattern inside of this. You got some like kind of like a cup with just like this flat base right here, really kind of a little bit more. I wouldn't say it's like wedging, but just tightening up side by side. And then you kind of look this weekly right here. So it didn't really kind of handle that. That's a little concerning. It kind of just like flattened out and just chopped around in the handle area. But we'll see if we can follow through from here. I would definitely say not too far from this point though, because then you're starting to get pretty extended out there. Since I would say the break, you read that already. Okay, cool. If anybody's got stocks, just throw the names out there on either chat. X, you guys, I see there's a bunch of guys in there, but everybody's a little quiet over on X. Okay, so for app 11, this is why you need to have a good stop loss. This dropped 8.24% in just that one day. So this just shows you even some of these names that a lot of people are talking about can get crushed. Been watching Eli Lilly still. Oops. Trading really tight. Did kind of look like it almost had this like shakeout on, Friday. This name, not really looking to buy just yet, though this was a really, really nice, strong move here. We're still almost 20% below the pivot up here, below those all-time highs. And it is a lot more of a volatile stock. So if this somehow gave a nice tight entry, I would be really interested in taking a position on this, playing in those space exploration spaces. What else we got? This is Amherst Sports. I've been watching this name for so long, and they kind of fell apart. But now it's looking like building like somewhat of a cup with a handle right here. This is, they make a lot of, like, I think Wilson is one of the biggest companies. Atrix, that like hiking company. Okay, what other names are popular in this? Louisville Slugger, Salomon, Wilson, Marini. Yeah, you guys can see all those names up there. But yeah, cup with handle, forming right here. Really, really strong fundamentals on this name. Definitely not a group that is like screaming to me I need to pay attention to, but still something that I am paying attention to. All right. Don't see any other names added here. All right. So, look, I think it's one of these markets just really, really, don't just rush into things. It's the beginning of a new year. Everybody's got a clean slate. Do your best to just stick to your rules, clear your head from any both positive and negative things last year. Don't let yourself get overconfident from the successes you had last year. Don't let down on the struggles that you had in 2025. New year, start fresh. Nobody cares what you did last year. Everybody wants to know what you did this year. So just work to be the best trader that you can be, trade your strategy, and hopefully finish out this year with a grin on your face that you did and hit all the goals that you were looking for. Again, sorry, I'm still battling. It's kind of cold. But last thing we'll do, because I figure you got a couple people in here, I'm just going to show people real quick. If you guys don't know, I'm working on a trading journal. And this is not my portfolio, just so you guys know. This is a test portfolio. I'm working on a trading journal. It's called Waypoint. It is completely a basically customizable performance metrics and AI tied in journal that also looks at market and mindset. So what you really do with this is, and this is year to date, if we do all, I'll show a little bit more. What you do with this is you're going to come in here, you kind of set up a bunch of different settings, your portfolio, all different stuff. You come in, you drop in your trades that you just download from your broker CSVs file. You drop them in, very, very easy. It then populates all your trades. It groups all of your trades together so that when you have what I call in this as a campaign, where you have your initial buy, possible add-ons, partial sells, back and forth to the ultimate point of closing out that whole position to a zero, it'll group all those trades together so you can follow those campaigns as one, making it for easy analysis. And in my eyes, making your trading metrics make more sense because that one trade, those add-ons, those partial sells all kind of tie into one trade. So you get that. Then it builds out a dashboard where this is going, like I said, to give you all the important metrics I think that everybody should be looking at. Your P&L, your win rate, your profit factor, your payoff ratio. You know, are you, yeah, it's great if you're winning, but are you winning very little when you win and losing a lot when you lose? Looking at your average win, average losses, things on dollar amounts, percentages, and all this is customizable. So you can size things, you can move things around, and you can also remove things that you don't really want in here as well. So this can be just set up to the way that you want. You can see all your biggest wins, your biggest losses, your best impact trades, your best trade in general, impact meaning to your portfolio. And then you also have like your equity curve. This gets completely built out, custom, and then trade outcomes. Then I also got like checklist, daily routine, which this resets every single night. So you can build your daily routine in here once, check off, and then tomorrow it'll all be back to unchecked. And then weekly, that same thing happens, but just on a weekly basis. So there's all your kind of performance metrics. You have a risk manager. This is something that I think a lot of people do not do enough, is understanding the risk that they have in their current open trades. What this allows you to do is to this will update current prices. You can update stops, your initial stop, which is just your initial stop. That'll tell you what your current R is from there. So like right now from 160, this is a 2.8 R. Then you can have your current stop, let's just say, and then it'll show you your P&L, stop to P&L percent. So if I was to let it go bound to this watch, this is what my trade P&L would end up being. My percentage to the stop from current price to there. And then my risk is based off the initial stop. So this is de-risked now because my current stop is higher than my initial stop, which is higher than my entry price. So a quick way to kind of update these, have an idea of what's going on with each individual trade. And then this updates up here to show you your trade risk, which is just the combination of all the risks that you have in your open trades. Your portfolio heat, which tells you exactly how much risk your overall portfolio has if all your stops get hit. So if everything gets hit, it would be a 4.16% loss. Obviously, I'm not letting this drop that far, but because this is just like I said, I'm not even keeping this thing up to date. This is just test portfolio. Unrealized gains, um, unrealized equity returns, just a bunch of metrics that you can follow, mostly focused on the idea of understanding the true risk that you have out in the market. You have a new position calculator, which will allow you to quickly understand how many shares that you should buy, how much risk you want to use. This can all be set up to have default percentages within your settings. So you can actually make these all defaults so that when you come in here, you just put in the ticker and it'll tell you basically what the max position you can put in on based on that. Or you can say like maybe you're using a 250 stop, maybe the stop's a little bigger. It'll kind of just help you to work out your risk management on that side. And we got trade log. Just trying to run through this guy quick for you guys. Like I said, grouping all your trades. But what's cool in here, you can also manually log your trades. But even for your imported trades, you can come in here quickly. You can put in and you can add these all custom, your setups and your sell rules, the type of position, quick notes, and add screenshots, just so you can really quickly keep track of some of your decisions and why, and journal each of these trades. With those tags, it just makes it quicker. Debrief is after a trade is closed. This is just kind of your post-analysis worksheet. Again, for speed, quick grade, you can create your own custom tags of things that you're trying to track. So instead of sitting here writing everything out, like good entry, poor entry, held too long, held too short, you can kind of have these things to just quickly add, and you can, again, create these as custom tags in the settings so everybody can have things that they want to keep track of. And then you have your log and your screenshots. And easy for post-analysis because you just bring up, like I bring up Deepvue and I have this on another screen. I bring up the ticker. I know my buys and my sells. And I could quickly just go through the chart, mark up a chart, and do everything because I have all the data that I need. All my notes are going to be in here if I did have any notes, things like that. And in position sizing, all that stuff's here. This is a market outlook journal, so you can daily log your thoughts on the overall market and the overall trend. That all saves kind of down here. You could also do it via voice. Then you have an in-depth mindset journal where you can put journaling for pre-market, intraday, post-market. You have all different quick mood selectors, and then your personal life, which is just maybe sleep patterns, health, family, friends, just overall how you're feeling, and then trading life. Both of these also allow you to just speak into it to log those journal entries. That all saves. And then all this stuff gets tied into a AI coach, which will also look at your trade risk settings, which are your max risk settings, and your trade rules to analyze everything in your basically trading journal. This was just a really, really quick walkthrough, just because I figured I had you guys here, and hopefully something that you guys will be interested in checking out. Going through some QA and stuff right now, just making sure everything is working properly. Little small stuff and life improvements for the application. But I will be releasing this out to people very, very soon, hopefully within the next week or two. This has been a labor of love for over a month now. But just decided to build something like this because honestly, I was just so tired of the way that I was logging trades, whether it was through Excel, whether it was pen and paper, or some of these other applications out here that are just like really designed for like day traders. And just there was just so much clutter and nonsense, and it was still taking me a while to do logging. So that's why I tried to do a lot of these tags and things. And you can manage multiple portfolios in here too. So that's a quick rundown of that. That's really all I got. First episode of the year. I appreciate everybody here. If you're still watching at this point, make sure you're subscribed. Make sure you hit the like button. Throw a comment on the actual YouTube video, or just reach out to me over on X and say what's up. But yeah, looking forward to another great year with everybody. This is a lot of fun for me. Hopefully it's helpful for you too. So that's all we got. Where is it? There it is. There's all my contact information. Discord group broke 1,300 people. So huge shout out to everybody on Discord. Over 1,300 people over there. And then again, if you're looking for any of my links, descriptions, Deepvue Link, all that stuff, YouTube, it's all over here. X, some of it's in my bio. If not, just shoot me a message. All right, everybody. Happy New Year. And cheers to a great 2026 for everybody here. Stay disciplined.